Welcome back, friends. Pentagon is struggling to understand how Beijing has mastered technology that tests the constraints of physics. Recently, China's supersonic test in July included a technological advance that enabled it to fire a missile as it approached its target traveling at least 5 times the speed of sound, a capability which no country has previously mastered. Pentagon scientists were caught off guard by the advance, which allowed the hypersonic glide vehicle, a maneuverable spacecraft that can carry a nuclear warhead, to fire a separate missile and mid flight in the atmosphere over the South China Sea, according to people familiar with the intelligence. Experts at DARPA, the Pentagon's advanced research agency, remain unsure how China overcame the constraints of physics by firing countermeasures from a vehicle traveling at hypersonic speeds, said the people who are familiar with details of the demonstration. Military experts have been poring over data related to the test to understand how China mastered the technology. They are also debating the purpose of the projectile, which was fired by the hypersonic vehicle with no obvious target of its own before plunging into the water. Some Pentagon experts believe that the projectile was an air to air missile. Others think it was a countermeasure to destroy missile defense systems so that they could not shoot down the hypersonic weapon during wartime. Russia and the United States have also pursued hypersonic weapons for years, but experts say that the firing of countermeasures is the latest evidence that China's efforts are significantly more advanced than either the Kremlin or the Pentagon. White House declined to comment on the countermeasure but said that it remained concerned about the July 27 test, which was first reported by the international media around that time. This development is, of course, concerning to all of us, and it should be who would like to have peace and stability in the world. And this builds on the Pentagon's concern about many military capabilities that the People's Republic of China continues to pursue. So, China pursuing a mission which is defying the laws of physics, where stock markets this week I think are going to do something which is going to defy the laws of finance. So stay tuned, friends. I think this is going to be a rather a week which you will remember for a long time. There will be sudden moments which most people right now it looks like a lull before the storm, but the storm is brewing up, friends. So um, what it will entail is going to be maybe a fiction of imagination, but I think that we are looking at a rocky period because there are many factors which are gathering in the background. Among the foremost of it is the um, consideration of appointing the Fed chief. As you know, Jeremy Powell's reign ends in February of next year, and now there's a possibility of we may have another new Fed chief in Brainard. So these are the factors. Brainard has a very different way of looking at inflation and uh, appears to be more dovish than the other members of the FOMC. So it's going to be an interesting decision to see how what Joe Biden finally decides as a Fed chief. There are other factors which are gathering in the background as well, like you have oil prices now plummeting to 6 week low. Normally, this is considered to be good because it is anti inflation, but there's also a danger of falling oil prices in that it is indicative of demand destruction. So, you find that this coupled with the rising coronavirus cases in Europe, in Austria, and Germany, in many other parts of the world, could also lead to a situation where there may be lockdowns once again. Now, if you encounter lockdowns once again, then you may find a situation that people use less of gas, people use less of oil, heating oil, etc. Even um, although the winter is and there in most of the northern continent, yet less consumption of oil in the backdrop of lockdowns of gas because people are driving less to work, that may lead to more oil prices coming down. that is indicative of demand destruction, friends. And whenever there is a demand destruction, then you may find that um, people are not able to factor in the good consumer sentiment. This may lead to its own impact. Demand destruction may lead to its own impact of poor earnings of many companies. So, okay. So it's all a vicious circle, and one needs to take all this into cognizance before deciding how this week is going to move ahead. All very important this week is not only that, but personal consumption expenditure data expected on Wednesday. It will show the sentiment of the consumers. Also, very important piece of data that you need to take into consideration, and it has a key inflation measure that the US Fed looks into very closely. So many things are building in the background. Oil prices continue to fall. However, the supply shortages are also persisting. So you may not see the prices or lower oil prices internationally translating into lower prices at the pump as yet. Yet demand destruction is something that you need to be worried about, just because the supply constraints are there, and most supply shortages, the supply constraints, the supply chain issues that you see today may ease out sometime towards the second quarter of next year 2022. That's what our analysis says. Yet this is still about 6 months away, and right now we need to have many things that you need to take into cognizance. The most of the debate around the Federal Reserve has been how soon they are going to raise interest rates, whether they will hasten the tapering program, and if not, then if they continue to see these falling oil prices, they may just continue uh, with the same low interest rates. Okay, now that is as far as oil is concerned, but other metals continue to do well. If this is symptomatic again of demand destruction, could come back to haunt in a different manner. So you may have low growth which will come into the picture, and that could cause a greater cause of worry. At least when there's inflation around, when there was expectation that there will be a rebound in the world economy because of high growth. Now once that expectations are also reset at a lower level, that is definitely a cause of concern, friends. So, all in all, I think we're looking for a rocky ride on Wall Street this week. Friends, you need to be very cautious, and any misadventure can spell great amount of losses. This is my cautious view on the markets in the week beginning November 22, 2021. And do not forget, this is the Thanksgiving week, with Thursday being a day when the markets are closed. Friday also truncated day. Markets open up to 1 p.m. only. Have a great investing week ahead. And yes, friends, if you have still not subscribed to my YouTube channel, please do not forget to do so. And for those who need more detailed analysis, daily information about where the markets are headed, when the big crash will come, and how you should prepare yourself for it, then do please email me at globalmoneyininvestor@gmail.com. Happy investing. Take care. Bye bye.